What's up, team? It's really good to be back with you guys today. It's Friday and we are back to the charts again. So, what we're going to be doing today is something slightly different. I'm going to be going through the charts and seeing which potential setup we could have taken and which ones that we missed that we could have benefited from. It's always good to look back and reanalyze, and so that next time when you come across the same market behaviors, you might have a different approach to it. So it's always good to take in mind that most patterns that happen in the past, especially in this trading environment, can potentially happen. So there are certain patterns that repeat themselves over a certain period of time. So it's always essential and it's always important for you to understand them, and it's always important for you to be able to identify them before they present themselves on the chart. So for that, you have to look back and practice with the previous price, that with whatever price has shown us in the past, so that it can help you identify, so that you can improve your mindset and you can improve your approach on the markets. So without further ado, we go to the chart. So our first thing that we're going to be doing is we're going to be looking at the news. So today we have GBP news. This one has already came through. Then we have at 10 a.m. prelim UAM consumer sentiment, which is coming at 10 a.m. Eastern time, which is the New York time. So it's important that you add that time into your clock, which is very better, because given that you can be calculating with whichever time zone you're using, but sometimes the daylight saving times ends up changing. Therefore, you might still be using the old timing when the daylight saving times have already changed. So you might find yourself taking the wrong trades or taking trades at the wrong segment of the market, which is something that we want to avoid. So as we go here, let us go to the charts. Okay, we're going to be starting with Euro USD. Obviously, Euro USD, on the previous video, we did some analysis on Euro USD, and as you can see, I don't like these ads. And as you can see, this black line here is the start of this week. We have Monday, we have Tuesday, then over here we have Wednesday, and over here we have Thursday and Friday. So from what we can see over here, market started over here, came up here, then returned. So on the overall picture, you can see that the market didn't really move much, and this is something that they usually do. They open the market, they hit the stop highs, hit the stop low, and they close the market at the same price where it opened. Like specifically this, from this example right here, price open, went up, came down here, and it's currently trading over here, as you can see, which is like basically the same level that price opened. This is the weekly low, this is the weekly high. So price is basically trading within this range. So over here, first of all, I'm going to be identifying potential setups for the upcoming week, which is next week. Over here, obviously, price was trading up here, and price managed to break from up here to the downside. So essentially, as we always say, when price breaks this low over here and comes to the downside, as you can see, this is a good move. Obviously, out here we have level 1, we count this as level 1. So essentially, as we see level 1, we might be seeing some sort of consolidation, or we also might be seeing some sort of let me just do this real quick. Let me just, where were we? Price might want to consolidate at this point, or ideally I would like price to, because now that we are here, I'm looking for sell side, or I'm looking for some sort of a potential reversal pattern, like some sort of potential reversal pattern, so that price might come here, give us some sort of high, stop and height, and drop to the downside. But over here, as you can see, price has just been consolidating right now. And let me just open my, yeah, we got the TDI over here. Price came from up above, so this is where we are currently trading at. So for EURUSD, I'm not really seeing much movement currently. Let me go back over here. All right, so this is what's happening on EURUSD. Let's see another pair that is potentially giving us a good setup. Not too clear. I don't like anything that's not really clear, you know. If I can't see something, I don't force myself into the markets. I like to see something. AUD CHF, I think AUD CHF would be a good pair to actually take a look at. So what we are going to be doing now is AUD CHF, right? See overview, see it on supercharged. Now let us see. Close this real quick. Okay, so now we have UDCHF over here. This is the 15 minutes. Let us go to the 1 hour so that we can understand the bigger picture. As always say, if you go to the past, you can see where we're coming from, and then you can start projecting your expectations on the market. So obviously over here we have, I would like to call this our peak formation high, and we have our level 1 drop. And most of the time you can identify this level through the drop and the pullbacks. But then we have our level 2 drop, and at last our level 3 drop. Sometimes they might even make more levels, but ideally we should expect 3 levels of rise or 3 levels of drop. So at this point over here we had price coming from this point here. We had 1, we had 2, we had 3. Another thing that I like to do is mark my wicks, right? I like to mark my wick, like, just to better understand where we are coming from, and it can also help you, especially when it comes to the level counting. These weekly lines, they can also help you identify which level you are in, if you use it correctly. So let me just mark this whole thing over here. Okay, let me just finish up marking. So this is another Monday, Tuesday, so we got Wednesday, we got Thursday, and today, which is Friday. So usually on Friday, Monday, Sunday. Okay, I like to make the Sunday lines take Monday, Tuesday, Wednesday, Thursday, Friday. Okay, Monday, Tuesday, Wednesday, Thursday, Friday. I like to make the end of the week lines tick, like these ones here, the Sunday lines. A big ticker is that it will help me identify, okay, so this is the beginning of the week. So usually at the beginning of the week, Sunday, Monday, there's this level consolidation, and Monday there's a lot of manipulation that I see on the market. Not to mention that we also see the fake move at the beginning of the week and at the end of the week. So obviously, as you can see over here, price started by consolidating, came down, boom, boom, up. So this was a fake move to induce traders that we were going to continue to the downside. And most traders, especially long-term traders, they probably bought it and then flipped, on them. So essentially, currently, as we can see where we are right now, we could say that this is level 1, or sometimes they could make a reset from this level over here. So this is why it's always essential to not only stick to one specific bias, but always take in mind that the market is constantly changing, and you have to adapt to its changes, which is something that is very essential, especially if you are in this trading industry. Learn to adapt. Don't only stick to whatever you believe. The market isn't entitled to adhere to your beliefs and whatever it is. Then the next thing is, you see that the market is changing, but you still like, no, I saw it sell, so it should go sell. No, don't project your beliefs on the market. Let it play out, and then you only react to whatever it is that the market has been showing you. So it's always important to do this. Okay, now let's go to the 15 minutes time frame. Got the 15 minutes time frame currently. Okay, 15 minutes time frame. We can see that price has been consolidating over here. Ideally, I would like price to, if price gave me some sort of low rejection. Yesterday they did give, but it didn't rise too high. They only rose until the Asian midline, which is a strong area also of, it was a strong area of resistance as well. It could enter bam bam. 2 trades over here. Over the first one was at the end of the London session, and the second one was somewhere at the quite at the beginning actually of the London session, actually almost sorry, New York session. That's when we had our second entry over here. It would be good because we do have the EMA, and if we are going to take our Fibonacci, we can actually see that we've got the Asian midline, the 50% line, which is this one over here. And it's actually crazy how, now that you actually look at it, if you're going to zoom in, you can actually see that price really just did draw a spike over here, hit this line, and then essentially rejected this line over here. I think I made a mistake over here. Yeah, this is the line, the Asian. Okay, sometimes I like something to be so perfection. Forgive me guys for how it took so long just to draw a flipping line. Okay, so you can see here how like price came here, hit this line and rejected. So at this point as well, you can see how price is also still playing around that same area over there. AUDCHF, let me go over here. I just want to see something real quick. Go to the 15 minutes. You can see also in the 15 minutes we do have an EMA and prices up already. Could be some sort of a quick sell setup over here. This could be something that we could potentially enter, given that price right now is going up. So what I want to see is some sort of railroad tracks. Okay, price is going up. I would like to see a red candle come and close below for me to enter sell side on this one, which would be sort of a quick sell trade, given that since today it is Friday. We wouldn't be expecting much movement. So what I'll be doing is, if price come up here and fails to break this one, given that we are now at the London Open, price comes up here, fails to break this high over here, it could break actually like with a wick or whatever, as long as it closes below this high. And I see like some sort of like a second I see some sort of like a second candle somewhere over here, coming like from this point here to this point over here, and giving us some sort of rejection of the high. That's when I would be ideally interested like in entering this trade, as long as it closes below the 13 EMA. But sometimes the shift bar, if you constantly just wait on it to close below the 13 EMA, it might be too late. So it's always essential to take that in mind and react accordingly if you come up upon trades like that one. So hold on real quick, let me make this a straight line. So if price were to give us some sort of rejection of the high, bam, to the downside or whatever, close over here, give us like a good railroad track, and I would really be interested in entering a quick sell, which we would actually end up booking a little over 25, 27, potentially 30 pips, which would be good, especially if we want price to come down here, which is the essential area. Yeah, potentially 30 pips, we would book potentially 30 pips, and our stop loss would have to be at a high, which would be potentially 7, but we could round about it, we could put 8, 9, or round everything up to something like 10 pips depending on the entry, because if we enter here it still goes into high. If we enter somewhere down here, then price would still be somewhere around here. Yeah, 10 pips, we could put a 10 pip stop loss, and at 30 pips or at 25 pips take profit, which would be something like 1:2.5, or if we get 30 pips it would be like 1:3, which is a good return. This is what we are in this business for. We analyze the probabilities and we only execute our trades when we have the most probable trades and we see the most probability of price going in our favor, based obviously on the previous movements that the price have given us, based obviously on also your experience. Okay, so yeah, So I wanted this to be quite quick. I ended up talking and speaking a lot, which is something that I normally do. So now let us go back a little bit on this pair so that I can also show you guys a couple of things. This was the week before as well. We can see how price from this point here, we could call this our peak formation low. I like to mark levels on the H1. We could call this our peak formation low. We had our first level of rise. This is our peak formation low, by the way. First level of rise. This one was some sort of rejected. Sometimes you might find two levels on a specific day, like in this scenario here, the rejection was big, and then boom, or you could say 1, 2, small consolidation, and then just a pin to the top and say 3, whichever you guys think is better. You could say, as long as you know which segment of the market you are in and you can execute on it, that's the only thing that actually matters. Let's look at this. Okay, yeah, so this is where we are right now, and yeah, I would like price to calm down over here, which would be good. Give me some sort of rejection here. This candle, if this candle gives me a railroad track, I'm enter sell side over here. And yeah, then I'll go to the Telegram channel real quick. If you haven't joined the Telegram channel, join. This is where I show some of the profits from the bot users, or most of the bot users have been benefiting and making. This one had a withdrawal of 469 from the bot, 7k on this account. He started with a big capital, 8k a month, about a 1k a day, 485. Yeah, the more capital, the more return. If you have something like 10, 20k to start up, your returns are obviously going to be better. So, which is something that's very important for you to realize, especially when you are starting up at this thing, right? So, okay, guys, so this is it for today's episode. I'll definitely catch you guys on the next one. Stay tuned, and really glad that you guys tuned in. If you haven't subscribed, don't forget to subscribe, and I'll catch you guys on the next video. So bye, guys.